Good evening, everyone. I'm Rakhi Gautam from greytHR, the moderator for the session today. Thank you so much for taking out the time and joining us. We are just starting the session, and I would like to also announce, in case you want to share this webinar with your colleagues, your friends, your family members, anybody who you think would gain valuable insights and would be helpful for them, you can share this link with them to join right now. They should be able to join it. Okay, I think we do have the quorum with us to start the session now. As I said, I am Rakhi Gautam. I've been hosting greytHR Parichay webinar series, and it is a pleasure to have you all here with us today. Thank you for joining our webinar, which is on payroll compliance, navigating taxes and regulations. Now, as most of you are aware, our webinar is divided into two parts. The first part will be a presentation by our expert on the topic, of course, which will then be followed by an audience Q&A. Now, audience Q&A is where time is all yours. You can start putting across your questions, and we will be able to take them up towards the end. There's an icon that's called Q&A that will be visible on your screens. You can just tap on that and you'll be able to punch in your question there. We will take all the questions towards the end once the presentation is done. Also, this session is currently being recorded. So if you happen to miss out on anything, do not worry at all. We've got you covered. We will share the recording with you once it is done. And also, this session recording will be available on greytHR's official YouTube channel under the playlist Parichay. So you can always visit our YouTube channel and just scroll through the recordings and watch it later as well. Okay, now I think we can start. So before we go on to the actual presentation, let me just quickly give you an overview of what we are going to be covering today and about our speaker's profile as well. So we will be providing an overview of key payroll regulations, identify common compliance mistakes that we often or might do, and share best practices for seamless payroll management. So get ready to gain valuable insights into mitigating compliance risks and avoiding penalties that can impact your business. So whether you are an HR professional, a payroll manager, or a business owner, this session will definitely equip you with the knowledge to stay compliant and manage payroll effectively. Now, to decode all of that and to share her insights with us today, we are thrilled to have Ms. Shilpi Jain, partner with Jain and Associates, who will be joining us for the presentation. Let me quickly take you all through her profile. So, Ms. Shilpi Jain started her career in international taxation with BMR Advisors before joining Jain and Associates as a partner. With over 14 years of rich experience, she specializes in providing advisory services to multinational corporations, helping them navigate the Indian regulatory landscape. Her expertise includes comprehensive management of finance and payroll processes, as well as ensuring compliance with varied Indian regulations, including income tax, GST, labor laws, FEMA, and ROC filings. She has a deep understanding of payroll management, including salary structuring, ESOP taxation, social security planning, and expatriate taxation. She is a graduate of Lady Shri Ram College of Commerce, University of Delhi, and holds a master's degree from the Delhi School of Economics. She qualified as a chartered accountant in 2010 and was an All India rank holder. So we can say that we've gotten the perfect person with us today. Thank you so much, Shilpi, for joining us, and it's a pleasure to host you.
Thank you, Rakhi.
Thank you so much. Now, I think our audience is eager to learn from you. So I will now hand over the session to you. You can share your screen and take us through your presentation. Also, if you could speak a little louder, I think there's a little audio lag there.
Just 1 second.
Sure. While Shilpi is presenting her screen, I would just take a moment and urge each one of you to participate in this webinar today as much as you want. Ask away questions, share feedback. We would appreciate engagement from you. Thank you so much. Over to you, Shilpi.
Thank you, Rakhi, and good evening, everyone. Thank you so much for joining us. So as Rakhi introduced, our topic here today is payroll compliance. Compliance in general is very essential for any business to be sustainable in the long term. And when it comes to payroll in a country like ours, which is highly service driven, you know, it is very, very essential, to that payroll compliance is taken care of, not just from a point of view of having a legal compliance or avoiding legal consequences, but also to ensure that, the organization is able to build, an environment of trust and transparency with their employees, which helps to, build long-term relationships with the employees as well. Right. The overall objective of payroll compliance is, all these payroll regulations, whether it is taxation or, when it comes to the labor laws, is to protect the employees' interest, to ensure that, all their payments are being done on a timely basis, their social security benefits are being taken care of, and their taxation as well. So payroll compliance in general is a very, very vast area. Even after years of, practice, there are still things that will come about, new every day or so often. So we will try and cover the key aspects today, and the key practices which have helped us to navigate, through payroll compliance in an efficient manner. And so to start off with, we'll just go over our agenda for today's session. And we'll start with the key payroll regulations and taxation laws applicable to employees. Then how to navigate payroll compliance through the various stages of payroll. What are the common payroll compliance mistakes that we see, in our practice, and best practices for avoiding these and managing payroll in an efficient manner. And in case of any non-compliance, what are the penalties or consequences involved, right? To start off with, we start with the payroll regulations, which can be bifurcated into two aspects. One is the labor laws, which are the laws or legislations which govern the social security benefits and the working conditions for these employees, for the employees. These include the central legislations, such as PF, ESI, gratuity, bonus, maternity, and then there are state-specific legislations, which are, Shops and Commercial Establishments Acts, professional taxes, labor welfare funds. And from a taxation point of view, the entire thing is governed by the Income Tax Act, which is a central act. So we'll start our session today with the key central labor laws. The first and foremost being the provident funds. This is being mandated for all organizations which have 20 or more employees. And any employee having a salary of up to 15,000 per month is required to contribute to the provident fund. Now, prior to 2019, the definition of basic wages was highly litigative. Most companies used to interpret it as basic salary, whereas a lot of PF departments would have varied interpretations on this term. In 2019, the Supreme Court laid this debate to rest and said that all the fixed salary, excluding HRA, but including all other allowances, whether special allowance, medical allowance, by whatever name called, will be a part of the salary which needs to be considered while considering the PF deductions. Also, in case of any employee who is earning a salary of more than 15,000 per month, PF will still be applicable if they have an active UON as on the date of joining any organization. So in both cases, the PF is required to be deducted. The deductions or the contributions are required to be made at 12% of the salary, and salary being defined as we discussed earlier. In case the salary is more than 15,000 per month, the organizations can choose to deduct only up to 12% of 15,000, that is INR 1,800 per month. The contributions made from the employer and employee both are required to be deposited on a monthly basis by the 15th of every month, and the returns are also required to be filed on the EPFO portal. On a similar pattern, we also have next the employee state insurance, which is mandatory for organizations having 10 or more employees. The eligibility for ESI is employees having a salary worth up to 21,000 per month. Here, there is a difference in the definition of wages. Wages for ESI means the gross salary, including HRA and all other allowances, but excluding your variable components. The contribution rates are employee contribution at 0.75% and employer contribution at 3.25%. Again, the contributions are required to be deposited and the returns are required to be filed on a monthly basis by the 15th of every month. Moving ahead, We have the Payment of Gratuity Act, which is applicable on all factories and any other establishment which has 10 or more employees. Any employee who has completed a service period of 5 years or in case of death or disability is eligible for a gratuity payment. The amount that is payable is 15/26 of the last month drawn monthly salary for every completed year of service. The interesting aspect here is that every any period which is more than 6 months is considered as full year for the purpose of computing the 5 years or the completed year of service. The maximum amount that is payable as gratuity as per the law is 20 lakhs, but the organizations can choose to pay a higher amount if they so desire. Next is the Payment of Wages Act, this act is basically to ensure that the wages are paid to the employees on a timely basis in case of employees who have a wages up to 24,000 per month. Then there is also Payment of Bonus Act. This is applicable to all factories and any other establishment having 10 or more employees. Employees earning a salary of up to 21,000 per month are eligible for this bonus at the rate of 8.33%, and the bonus shall be paid within 8 months from the end of the financial year. Next is the Maternity Benefit Act, which is applicable to, again, all factories and establishments having 10 or more employees during the preceding 12 months. The objective of this act is to provide protection to the women employees who are, during their course of pregnancy and maternity. Any woman employee who has worked for at least 80 days in the 12 months preceding the expected date of delivery is eligible for this benefit. The benefit that is prescribed under the act is 26 weeks of paid maternity leave for the first 2 children, 12 weeks of paid maternity leave for more than 2 children, and then 6 weeks of paid leave in case of miscarriage or medical termination of pregnancy. Next, we have the Factories Act. This is applicable to any premises where manufacturing process is carried on. In case it is carried on with the aid of power, then the threshold for the applicability is 10 or more employees. If it is without the aid of power, then the applicability is on 20 or more workers. The primary objective of this act is to regulate the safety and health conditions and the working conditions of the employees, including their working hours, their overtime payments, annual leave, so on and so forth. Okay. Now we come to the state-specific labor laws. The first one that we start with is the Shops and Commercial Establishment Acts, which is applicable on any premises where any business, trade, or profession is carried on. So principally speaking, effectively all businesses other than manufacturing businesses get covered under these act. And once applicable, and the applicability will be dependent on different state regulations, based on the high head count which is specified for each state. But once it is applicable, the establishment must obtain a registration and file returns. So this is very, very crucial, for all businesses to understand that, there is a mandatory registration as soon as this act becomes applicable on them. And this is also the regulation, which governs the working conditions of the employees vis-a-vis, again, their working hours, their overtime, their holidays, and other welfare measures that the company needs to take. So this is one key act that needs to be mindful of. Next is the professional taxes, and which is a state-imposed tax on individuals who are employed in any profession, whether they're working independently or within an organization. If a state where a person is employed in an organization and they have a PT law, then the employer is required to obtain a registration, deduct the PT from their salary, and remit it to the government. The deduction and the contribution amounts vary, state to state, but the overall upper limit that we have seen across all states is 2,500 per annum. So while it is a very nominal amount, but this is a compliance that is also mandated in some of the specific states, like Karnataka has this. So then we have the Labor Welfare Fund, which is again a state administrative fund to take after the labor and welfare of the labor employees. The contribution here is required is again very, very nominal, up to I think 200 rupees per employee. But the frequency of the contribution and the amount still varies state to state. We went through some of the key regulations when it comes to, the labor laws, whether it's central and state. And even when it comes to the central laws, it is very, very essential to understand that, the how they are interpreted and how, they all have some rules and regulations which are very state driven. So practically, it is very important to understand, how each authority in the different states views these and how they are interpreted to ensure that the business remains compliant with them. Moving on, now we move on to the taxation, which is again another very important aspect of payroll compliance. As per the Income Tax Act, the onus of deduction of taxes on salary has been made, put entirely and 100% on the employer. So in case of any salary or any benefit which is provided to the employer, it can be your monthly salary, your rewards and recognitions, gift vouchers which are given, stock options which a lot of companies are giving now, or you have per diem reimbursements or anything of that sort. If any such component is taxable under the Income Tax Act, the employer is responsible for deducting the taxes on this. So it is very important for organizations to understand, what is the taxability of the benefits that are being provided to the employee, and make sure the taxation is taken care of in a proper manner accordingly. The employer can also choose to bear the taxes on, in case of non-monetary perquisites, in which case that shall be a tax cost to the employer, one in the, a dual tax cost, so to say, because they also bear the taxes which they pay to the employee, and the tax which is borne is not a tax deductible expense for the company. Taxes are deducted based on the declarations that the employee submits at the beginning of the year for the tax investments they are making, specifically in the case of the old regime. And the common deductions are, of course, HRA, housing loan, medical insurance, life insurance, so on and so forth. At the end of the year, it is important that the employer obtains the proof of investments from the employees against each and every exemption or deduction that is given. And it is also important to ensure that the proof of investments which are collected are in line with the circular that is issued by the CBDT on an annual basis, laying down the guidelines of the proof that the employer is required to collect for providing benefits of exemptions and deductions under the Income Tax Act. The taxes so deducted by the employer on the monthly payroll are required to be deposited on a monthly basis. And the employer is also responsible to report the salary paid and the taxes deducted on the salary in a proper manner, which includes issuing payslips to the employees on a monthly basis, filing the quarterly returns for the salary paid and the taxes deducted in Form 24Q, and issuing Form 16 and 12BA to the employees in case of perquisites by the June 15th on an annual basis. Right? These are some of the key regulations that play a role in the payroll compliance. Now we will go over how these impact the various stages of payroll, which is the onboarding of an employee, processing their regular payroll, and the employee exit. Starting with onboarding, the first key step for onboarding is to make sure the employee's KYC is done. So the employee KYC includes, obtaining a copy of their PAN card, their Aadhaar card, obtaining their PF form in Form 11 and the UAN details, and any such necessary details. Once we have the employee's KYC, based on the KYC, we can open up their social security accounts, the PF account, ESI account, whatever is applicable to the specific organization. In case of PF, it is important to note that the UAN is now linked to the Aadhaar. So any mismatches in the KYC details, such as name or date of birth, between the two portals may lead to delay in PF payments. So it is important to ensure that in case there is any mismatch which is found on the PF portal, is intimated to the employees on a timely manner so that they can take the corrective action and ensure their deposits are made on a regular and timely basis. Apart from this, the PAN of the employee is also required to be linked to their Aadhaar, and that can be verified from the reporting portal as well. Next, after the KYC is done, it is also important that the payroll is set up in a proper manner. What this means is that all the salary components of the employee, whether it's a fixed components or the variable components, including perquisites, are set up accurately in the payroll system from a taxation point of view and also from a deduction point of view. The taxes, for the purpose of deducting appropriate taxes, the employee is required to submit their tax declaration and also choose their preferred tax regime, whether they want to choose the old or the new regime. After the onboarding is done correctly, when we come to processing their monthly payroll, the first step that to ensure from a payroll compliance point of view is to ensure all the statutory deductions are made in a proper manner. Now, the taxes need to be deducted on a monthly basis, as we previously discussed. Now, for this, of course, during the course of the year, the taxes are deducted based on the declarations that the employee submits. But towards the fag end of the year, when any employee exits, during the year or at the year end, it is important to ensure that the benefit of exemptions and deductions is based only on the actual proofs or the proof of investments and not on the basis of IT declarations. And as we discussed previously, that in case, the employee, as organizations provide a lot of benefits and perquisites to the employees on an ongoing basis, it is also important to ensure that these are taxed in a proper manner, and it is also identified who will be the one bearing the cost, whether it will be the employer or the employee, and it is accordingly reported in the tax portal, on the payroll portal. Apart from the taxes, of course, we also have labor law deductions once it is applicable to the organization. This can include PF, ESI, professional taxes, LWF, as may be applicable for the specific organization. It is important to ensure that in case of joinings and exits, all these deductions are made in a proportionate manner so that there is no shortfall or excess deductions. Whatever statutory deductions are made, then of course it is important to also ensure that these are deposited and reported in a timely manner. There are different modes and mechanisms of payments of these, statutory dues. So PF portal will have its own mechanism of making the payment. The LWF portal will have its own. PT will have its own. So what is important is to, reach out to the banking partner that you have and ensure that you have the proper setup so that you can make the payments on a timely manner. And it is also always advisable to avoid last minute payments, for statutory dues, because you can have glitches, and, banks also have a very specific cutoff when it comes to processing, statutory dues, to ensure, you're aware of these cutoffs and make the payments on a timely basis to avoid. Let's say if you were to make the payment right on the 15th and the portal throws an error, and you can land up in a challan which is dated on 16th, and then you have consequences, which we'll of course talk about in the later end period of this session. Okay, so this is as far as regular processing is concerned. Now, when it comes to the employee's exit, it is very, very important to ensure that when we are processing the full and final payments, all the exit benefits that are available to an employee, which includes the leave encashment as per the labor laws, which we just talked about, as well as the leave policy of the company, gratuity as per the Payment of Gratuity Act, any notice period buyout or deductions that need to be made as per the employment agreement, and any other ex gratia payments or deductions that the employer needs to make. All of these are considered while processing the full and final payments. And from a taxation point of view, it's important that some of these benefits come with their own exemptions or deductions under the Income Tax Act. So that is properly considered or set up in the payroll. And as we discussed, that in case of an exit of an employee, the benefit of exemptions and deductions, which are related to components such as HRA, ATC deductions, and so on and so forth. They are provided on the basis of the actual proofs or actual investments made by the employees during that year, and not on the basis of tax declarations. Once the FNF is processed and the salary is paid out, it is also important to ensure that the employee's exit is updated on the EPFO portal so that they can, register with their new employer on the EPFO portal from the correct date. Right. So this was about navigating payroll compliances through, the different stages of payroll. Now we will go over some of the common mistakes that we see in the, payroll compliances. To start off with, some inadequate documentation or record keeping. So as we started with, during the payroll compliance, having an employee KYC documentation is very, very critical, as is maintaining accurate records for, payrolls that you have paid. So including your pay sheets, your PF challans, all these things need to be maintained in a very proper manner. Not just, from a point of view of, in case of any investigations or audits that you have, but also from the point of view, when employee raises any questions or queries, it is important that, you have this database to be able to handle that. And this is what enables employees to, have their withdrawals or transfers from PF or any such funds in a proper manner. Then comes lack of clearly defined policies. So as we went through, the Shops and Commercial Establishments Act and as well as the Factories Act, there are guidelines which are specified under these laws with concerning the working hours. How many working hours can an organization have in a week? What is the leave policy that the company needs to have? So it is very, very important to define these policies. We would have all heard about the recent unfortunate incident that happened with one of the employees at EY. And there was a lot of debate after that, that about a lack of, policy governing, a clearly defined policy governing the working hours for employees in that organization. It is very important for organizations to be cognizant of, the applicable labor laws and setting up policies, defining these these things so that, to avoid any such conflicts. Then the next is incorrect calculation and deduction of taxes. Now, this can happen on account of many, many factors, whether the tax proofs are not being done correctly. Maybe there is a clerical error which happens in the calculations. So this is also one common mistake that we see, in payroll compliances. Then late payment of statutory dues. I mean, again, this can, if there is any mismatch in KYC documents for the employees, that can also help, lead to late payment of PF payments. In case, the bank cutoff is not there, of the portal throws glitches, then also you can have any late payment of statutory dues, which can have its own consequences. Lack of internal controls and regular software audits. So very important that when you're processing payroll, because it is such an important and crucial aspect of any organization today, that you have a maker checker system in the process, so that the person who's making it is also getting reviewed, and also the software that you're getting, using for processing payrolls is reviewed and audited on a regular basis. The last is mismatches in deductions and reporting. So important that, whatever deductions are made from the employee's salary are also deposited and reported on a proper manner. In case there is any errors that can lead to, not providing appropriate benefits to the employees, and which can, of course, lead to future questions and investigations from the employee as well as the department. Now, having looked at these, common mistakes, there are some practices which are very, very, advisable for managing the payroll in an efficient manner. So first and foremost being, protecting the employee data. So payroll, as we all understand, is highly confidential and highly sensitive data. So it is important to have controls in the system to ensure the information does not go into unwanted hands. Secondly, automating the payroll processes really helps in making, your payroll very, very efficient, and also making sure that, avoiding any errors and making, helps to fast track the process and ensure that you're able to meet all the timelines that are there, as, there are monthly timelines involved. Third is handling benefits and deductions correctly, which means that you need to, evaluate the taxation of all the benefits that are being provided to the employee, and then make sure that the benefits and deductions are based on either on the IT declarations or the proof of investments that are being submitted from the employee. Next, staying up to date, with the changing regulations. So from a taxation point of view, every year there is a budget that is announced, which may have some changes in the payroll taxation. Apart from this, the labor laws also keep coming up with more and more changes. So for example, in the state of Karnataka, we had earlier this year, there was the Karnataka state had announced that it is mandatory for all organizations to take an insurance coverage for their gratuity. So similarly, there are different kinds of regulations and updates which keep on coming out. So it's very, very important for an organization to stay abreast with all these changes and make sure that their payroll systems are also up to date, to incorporate this. Then again, another key aspect of, handling and managing payroll is educating the employees on the payroll related policies, how their taxes are deducted, how their deductions are being made, and how they are being deposited. And in case of there is any query that is being raised from the employees on any such front, they should also be handled in a timely and efficient manner to avoid any non-compliance on this front. And lastly, in case of, because as we said that, there are common changes and these are very, very vast and complex regulations. So it's always helpful to consult with experts, not just for their technical expertise, but, also their insights on how these regulations are interpreted by the authorities on a practical level, So, and this is what is very, very crucial to help businesses remain compliant. Right. I think now we will move on to the last aspect of our session, which is, in case there is any non-compliance despite all our best efforts, then we should be well aware of what the non-compliance is. So we'll first come to the taxation. So as we said in the beginning that, the onus of deduction of taxes on salary is entirely on the employer. So in case there is any shortfall in deduction of taxes at the year end, the employer will be responsible to pay those taxes. It is entirely recoverable from the employer. So that is why having very strong and robust processes in place, with whether it is with respect to taxability, whether it is respect to proof of investments, is very, very crucial. Any delay that is made in the deposit of interest, TDS, is subject to an interest of 1.5% per month. Any delay in reporting in the 24Q is subject to a penalty of 200 rupees per day, and delay in issuance of Form 16 is subject to a penalty of rupees 100 per day. And in case there is any delay in the labor law contributions for the employee component of it, it also forms now a permanent tax disallowance for the business. So that is why it is essential to avoid this, that all these payments are done on a timely basis. From a provident fund under the Provident Fund Act, any delay in deposit, attracts an interest up to at the rate of 12% per month, and damages up to 100% of the Provident Fund amount that is delayed Similarly, under the ESI Act, you also, in case there is any delay, it also attracts interest and damages up to 25% of the amount. Under the Payment of Gratuity Act, any delay in payment of the gratuity, which is due within 30 days of the date of exit of the employees, is subject to an interest of at the rate of 10% per annum. And any failure to pay the gratuity as prescribed under the Act may involve prosecution of 3 months to 1 year and a fine of 10,000 to 20,000 rupees. Apart from this, there is under the Maternity Benefit Act, any failure to provide the maternity benefit or to dismiss any woman employee during the course of a pregnancy or maternity also it attracts a prosecution of 3 months to 1 year, along with a fine of 2,000 rupees to 5,000 rupees. Right. These are some of the key penal consequences that we talked about. Of course, there are many, many, as we said, labor law or payroll compliance, it's in itself is a very, very vast area. So it is important to ensure, to consult with experts and also to be very, very aware of, what regulation is applicable on the organizations and how it is interpreted on the ground level and how the business can remain compliant to avoid any such consequences that we are talking about on the screen. I think we can end our session here.
Hi, Shilpi. Thank you so much for that comprehensive presentation. I'm sure it was helpful for our audience today. Now, I already see a lot of questions coming in, so we'll quickly take those. And I would urge all the participants to share their questions, because first was the presentation. Of course, there was a lot of info that your mind had to grasp, but now you can ask for practical suggestions, anything that you had faced earlier, or if there's a situation that you would like Shilpi's insights on, please ask away those questions in the Q&A channel that is there. Okay, so the first question is from Prachi Jain. I think this was in the beginning when you were discussing what about for the partnership firm. So this is just that is shared. So if you can share something on this, or otherwise I would request Prachi to please elaborate this question. In case if you could give us some context, we would be able to help you better, because right now it's just a partnership firm. Not sure what the question is.
So I think I'll take that question in the meantime.
Yeah.
That, partnership, I mean, it doesn't matter what is the form of entity, sole proprietary, or how many. What matters is how many employees. Most of the labor law regulations is applicable based on the number of employees that are there in the organization. So whether it is a partnership firm, a company, anything, as long as you meet the headcount, the applicability is there.
Okay, thank you so much for that. I hope that answers the question for you, Prachi. Moving on to the next question from Mohan Jacob. So the question is, if the establishment has more than 10 employees, but I think there's some, but D have less than 10 employees below. rupees 21,000 gross salary, is coverage under ESI mandatory?
Yes. So as long as you have 10 more than 10 employees, you are required to obtain the ESI registration. But the contributions are required to be made only in respect of employees who have salary below 21,000.
Okay, thank you for that. Moving on, this is the next question is, hi, LWF, is it mandatory in all companies or not?
No, so LWF is a very state-specific regulation. So only in states where the LWF regulation has been enacted, it is mandatory in those states only. And again, that will also depend on whether the law has any threshold on the headcount of the company, as we see very commonly in the labor law regulations.
Okay, thank you. Moving on to the next question. Just a moment. So there's a comment first. Hi, nice session. So thank you, Shilpi, for that. The question is, I would like to ask regarding Bonus Act, on what basis and the percentage you mentioned is used on basic pay, or how is it? Please provide some clarity on that.
So bonus act is only applicable in case of employees who are earning, I think, up to 21,000 per month as a salary. But in case that gets applicable, then on the salary, the gross salary itself, the payment of 8.33%, the bonus that is prescribed, and that is the minimum amount. Of course, the organizations can choose to pay a higher amount as well, but only and only in case of employees earning a salary up to that threshold. For the rest, it is a voluntary payment.
Okay. Thank you. Next question is from Hiril. Documentation is required, hard copies also, or only soft copies will be considered? Please clarify.
So I think in case of PF, it is always recommended to obtain, all your documentation in a physical copy, not necessarily PAN Aadhaar, but the form if 11 that we need to obtain from the employees with respect to, the PF registration and UAN details. That is something that is always recommended to be maintained in hard copy and duly signed by the employer as well. But the rest of the documentation, when it comes to PAN copies and Aadhaar copies, can be done in a soft copy as well.
Okay. Next question is from Omang Watts. I'm just doing like a rapid session here because we already have over 40 questions. So the question that Omang has is, if an organization provides salary under the following heads, that is basic, house rent allowance, medical allowance, convenience allowance, and city compensatory allowance, should basic plus CCA be considered as wages for determining the eligibility under the Payment of Bonus Act?
I mean, again, I would also have to deep dive into the Payment of Bonus Act to really go into how the wages are defined. But we can take this up offline. I mean, if required, if this is a specific question.
Sure. So, Umang, what we are going to be doing is after the webinar, we will be sharing an email with you, which will have Shilpi's credentials. So, you can directly get in touch with her on her email ID, or you can write to me. I will share the email ID and we will connect you offline. Thank you for that question, Umang. Moving on, there's a comment by Chandrika, a wonderful session. So, again, thank you so much, Shilpi, for that. Next question is from T. Swami K. So the person is actually asking if they can have access to the PPT presentation. So what I said in the beginning is that this session is currently being recorded. So the whole session with the recording of the PPT will be there on our YouTube channel that will be accessible to you. And along with the PPT, you would be actually able to listen to the insights as well that Shilpi has shared. So we will share the recording with you and you can watch it offline. Next question is from Sapna Sharma. What is the process of voluntary PF contribution?
So voluntary PF is allowed up to 100% of the basic salary, and the organizations can, of course, reach out to the employees, or employees can reach out to their payroll or HR managers to say the amount that they want to contribute. This is not something, of course, that is mandated by the law, but up to 100% is what is allowed typically.
Okay. Moving on to the next question from Prachi Jain. Can we hold the salary during for maternity leave of employee, and can we release once they will join back?
Again, this is not an aspect that we have typically gone into as far as salary is concerned. Of course, the regulation mandates that the salary for the entire period is required to be provided, but whether it can be done in one shot or on a regular basis, again, we will have to deep dive into it.
Okay, we can connect you offline and
Sure.
you can have the discussion on that. Moving on to the next question from Shiva, the same if the presentation is shared or not. So we will be sharing the recording of the session. It will have everything in that. You all can watch it later. Next question is from Anjay Kumar. What is the definition of basic salary, and are there any government notifications related to that?
So basic salary, I believe this question will be from the perspective of Provident Fund. And as we talked about during the session that, while basic salary earlier was interpreted to mean just the component basic salary, which we keep in the, which is very, very common in our payroll structures. But the government has really, the Supreme Court rather, has really given a mandate that, all the components of salary, as long as they're fixed components and given to all employees across, specific level, not necessarily across the organization, without any discriminations. In that case, all components except for HRA will form part of basic wages. And, you can have any nomenclature attached to it, whether it's medical allowance, transport allowance, special allowance, but all of it needs to be considered as part of the basic salary.
Okay. Moving on to the next question from Hiral. For gratuity, in case company has policy to complete final settlement in 60 days of exit, then will that be considered, or company has to change it to 30 days?
Preferably speaking from the technical point of view, it needs to be within 30 days, but we do understand a lot of companies have that policy. So far, we've not seen anything on that front coming from the government. So as I said, while these laws are they're in place, it is also important to understand how they're practically implemented across the
Okay. Next question is from Venkata Chalamar. If an employee is on contract work continuously for over 5 years, will the company be liable to pay gratuity?
I think in case of contractual employees, we will have to see what are the terms, on the basis of which the contractual employee has been done. In case it is directly on our payroll, then for sure it is required. But for contractual employees, it depends on the arrangement that we have with the employees.
Okay. Next question is from Abhinandan. What section of the maternity benefits speaks about the benefits of 12 weeks for the third child?
It's the same provision that talks about the benefit of 26 weeks, but I can give you the reference offline for the specific provision.
Sure. Abhinandan, please write to us on the email and we will connect you offline. Next, there's a feedback from Hiral. Beautiful presentation. Thank you so much for that, Ms. Shilpi. Okay, thanks, Hiral, for being a part of the session as well. Next question is from an anonymous attendee. The question is, if the employee's salary gross HRA is more than 15K, can the employee opt out PF or not?
Yes, only in case the employee has never been a PF member or they don't have an active UAN. So even if they were an PF member, but today they don't have an active UAN, which basically means they have withdrawn their PF and closed their UAN account. In that case, they can opt out of PF. But otherwise, if you continue to have an active UAN, you are required to mandatorily contribute to PF as long as the organization where you are employed also is registered for PF.
Okay. Moving on to the next question from Shravan. Please give some insight about the LWF, how to get the resignation done and the payment process and the returns, if any. Further, is LWF and SC licenses are different? Also, what kind of returns or documents to be submitted in terms of gratuity to the government agency?
So again, for taking on the first question, as far as LWF is concerned, it's a very state-specific regulation. So you will need to go across, for the specific process for the specific state. So while I can shed light maybe on one of the states that we have dealt with, which is Haryana, wherein the payment is required to be done once a year, but the deductions are required to be made on a monthly basis. So you basically consolidate the monthly contributions and then deposit it at the end of the year. The license wise, yes, there is no specific registration in case of Haryana, which is separate for LWF. It is the shops and commercial establishments one. But again, as I said earlier, these need to be reviewed on a state to state basis, and there is no blanket answer for this. Coming to the documentation required for gratuity in case of government, I think again, I haven't dealt with government, agencies as such, or, government payouts, gratuity payouts to government employees. So we will need to, deal with some expert on this.
Okay. Sure, you can write to us, Shravan, in case you still have any doubts. You can write to us on an email ID and we'll connect you with the right person for this one. Okay, moving on to the next question from Sumit Arora. I want to know about the new labor code, when it will be implemented, and what will be its implications on payroll compliance.
So the new labor code has been in news, I think, more than 4 years now, but there is no such, updates on to when it is going to be affected or what. I think as of now, we are in the status quo, and the current labor law regulations, continue to be applicable.
Next question is from Shreya Vaidya. Is SHOP Act is applicable for the NGO having 60 employees?
Again, I mean, the Shop and Commercial Establishment Act, being a state-specific act, will need to be reviewed, for the particular state, where the NGO is set up, and accordingly, you can determine whether it will be applicable for an NGO or not.
Next question is, first is a comment. Hi, nice session. Thank you once again for being the part of the session as well, and of course to Shilpi. The question is, I would like to ask regarding bonus act, on what basis and the percentage you mentioned is used on basic pay. I think we did take this
Already covered.
question. Yes, I think this is a repetitive question. Okay, we've already taken and answered this. In case you need any more clarity, you can further elaborate and we'll be happy to help. Okay, so the next question is from S. Anand, related to income tax delay in deposit of employee contributions, tax disallowance for the business. Can you please give example on this?
Yes. So if you know, I think a couple of years back, the government came out with this regulation that, rather provided a clarification on this. So PF or ESI, a lot of these funds comprise of two employee and employer contribution. So let's say for a particular employee, if I have 1,800 rupees as employee contribution, and along with that, I have employer contribution of 1,800 plus the admin and EDLI charges. So out of the total payment which we are making, the 1,800 rupees, which pertains only for the employee contribution, if it is paid after the 15th of the month, which is the due date prescribed under the PF Act, then the employer has to take it as a disallowance under Section 36 of the Act.
Thank you for that. Moving on to the next question, which is greytHR able to handle all these compliances? Yes, we are very able to handle all these compliances. And in case you have any specific questions related to anything, you can connect with us offline and I would be happy to connect you with the product support team. Okay, moving on to the next question, which is from Preeti. There is a compulsory gratuity insurance rules for gratuity. Want to know more about this? If you could share.
So yeah, we talked about it briefly during the session that in the state of Karnataka, that recently a regulation was released earlier this year that all organizations are required to mandatory have an insurance cover for their gratuity payments. And what it practically means is approaching the insurance brokers and obtaining their quotes and making sure that compliance is done. So, and the idea is just to ensure that the organizations have the capacity to pay out the gratuity payments as and when they become due for any employee who is eligible as per the Act.
Okay. Next question is, what is the due date of issuance of Form 16 for financial year 24-25?
I think it will be 15th of June 2025 next year.
Okay. Moving on, the question is from Sebashri Moharana. Hi Shilpi, can you please let me know about the calculation part of the VPF if the employer is liable to pay only the ceiling amount?
So VPF is entirely employee contribution. There is no contribution that is required to be made by the employer as far as VPF is concerned.
Okay. Next question is from Shiva. On the Apprenticeship Act, is it mandatory to register?
This is again an act that we have not really, delved into earlier, but I mean, we can go through it and, review this separately.
Sure. Shiva, you can connect with us and we'll be able to connect you offline with Shilpi and you can have this answer. Next question is from Kamlesh, related to maternity benefit. What steps do we have to take with reference to receiving forms or submitting forms for both employee as well as employer?
I think there are no specific forms to my knowledge which are prescribed under the Act. Of course, communicating with the employer as far as a woman employee is concerned regarding your impending pregnancy or expected date of delivery is very, very crucial to enable, the employer to, set up the processes in place and have grant your leave in a proper manner to ensure there are no gaps when it comes nearer to your expected date of delivery.
Okay. Next question is from Sharavanan. How do we need to calculate PF if employee basic salary is less than 15K?
So again, one thing, Saravanan, right? I will highlight is that when you're considering the basic salary, please be mindful of the High Court, Supreme Court judgment that we talked about. But in case the salary is less than 15,000, whatever is the amount, let's say it is 10,000 rupees per month, 12% of that is what you're required to contribute.
Next question is from Vijaya Bhaskar. Is gratuity deductible from salary? If deductible, how much percent of it?
Not really. I mean, of course, organizations can choose to structure their, salaries in different shapes and manner, but that's not, I mean, that is just a salary structuring. It is not something that is mandated under the labor laws.
Next question is this is regarding to your presentation that highlighted employee who have completed 4 years and 6 months, that is 156 days, will be eligible for gratuity. Is if you
That's
could
correct.
please
That's
confirm
correct. Yes.
that. Next question is from Suman. Hi Shilpi, thanks for the information. If gratuity is part of CTC structure, is the company liable to pay gratuity amount even if employees leave within 1 or 2 years?
I think again, it will depend on the terms of the employment agreement, how it has been made as part of the salary or, CTC. If it is something that is part of the fixed salary, then yes, it may be payable, but it will depend on the, specific terms of the employment agreement.
Sure. Next question is from Madhu related to resources. Where do we get an update on compliances or labor laws?
I mean, I think this is a very challenging question even for us. We also struggle with getting an update, but it is just as we talked about, having, reaching out to experts and engaging on portals which are providing these updates are the best way to go about it.
Okay. Thank you. Also, Madhu, we at greytHR, we have a compliance dedicated website. You can go through that. We keep, updating information there. So you can register. You can also sign up for a Great Tribe community where we have experts who can help you with these queries. So we will share that towards the end and you can sign up. Also, there's another question from Ramya related to how to install Great HR for a particular company. This we will get your credentials, Ramya, and we will connect with you offline. We would be happy to help you out and give the demo for Great HR. Thank you so much for being a part of the session. Next question is it mandatory to follow exact leave guidelines as per state? Can make exception. For example, Telangana state has 12 sick leave, 12 casual leave, and 15 privilege or earned leave. Can I propose one type of leave called all purpose leave? And Just a moment, all purpose leave. Say it's 30 per annum and 2.5 per month, accrued beginning of month. Any procedure, if you could suggest how to do that?
Sure. I mean, I think so. When we come to all of these leaves and the laws regarding relating to leaves, some of them have different mechanisms of what needs to be carried forward, what lapses at the year end, and that is why the labor laws have these different kinds of leaves. As long as the minimum criteria specified under the labor laws is met, of course, the organizations have flexibility to structure their leave policy in a different manner. But it is just important to ensure that the minimum criteria is met as per your policy.
Okay. Next question is from G. Chinnababu. If employee completed 4 years and 7 months, is employee eligible for gratuity?
Yes, that will be. Yep.
Okay. Next question is from Mamta. As you said, payroll data is highly sensitive. How do organizations manage to keep it completely confidential? How do we ensure that the payroll data is not known to the accounts team?
Again, of course, it's about being mindful and setting up processes in place and internal controls to ensure, the access to the data is only provided to the employees. You can have encryptions, you can have password protections to ensure, that this data is only, circulated within the team that is authorized to access this.
Right. Next question is from Manisha. Is leave encashment necessary to pay in FNF?
It depends on the leave policy and, of course, the applicable labor law. But if, as per the leave policy, the employee has a balance remaining, then yes, it needs to be paid as part of the FNF.
Next question is from Hiril related to bonus. So, is rupees 21,000 gross salary right? So, I think does the gross salary have to be 21,000 for bonus?
Up to 21,000.
Okay. Next question is I would like to ask a question regarding the calculation of privileged leave, casual leave, and sick leave as per the law?
Uh, Oh, calculation. I mean, again, this is something which is specified under the specific, Shops and Commercial Establishments Act. So you need to refer to that again. And in case of a manufacturing organization, the Factories Act. And each of these, the state-specific laws vary according to what is privileged leave, casual leave, or sick leave. So you will have to go through the state-specific regulation to understand, how these need to be implemented as part of the company policy.
Sure. Next question is from Kishore. They want to understand actually about Ved, your company. So the question is, just a moment, would employee of Ved Jain be given benefits with company group medical facilities? Is it something that is started in Ved Jain Associates?
I mean, that's a question for the HR to answer and not for me.
Sure. Of course, you can connect offline with Shilpi and get this answer. Next question is from Radha saying, can there be any grace time period for punch in and punch out for any organization?
Again, this is more a matter of company policy rather than a labor law or compliance, I will say.
Right. There's another feedback from Saravanan. Thanks for the session to explain payroll processes and compliance in detail. Thank you for being a part as well. Next question is maternity leave pay is mandatory for any small private company?
Yes, I think that as per the law, it is mandatory for any organization having 10 or more employees. And of course, as long as the woman employee meets the criteria of the minimum number of days being served in the company, then it'll be mandatory once you cross that threshold of 10 employees.
Sure. Next question is from Durga. Just a moment. In case we are not able to process bonus to employee, what will be the impact of that and how to account it? Should it be transferred to any government account?
Oh, again, this is something we'll have to again also check. Again, I don't, I'm not an expert on all these laws, but the basic applicability is what we can,
Sure.
understand.
Durga, you can connect with us offline and give maybe some context to it, and we'll be happy to help. Next question is from Rumika. If an employee's basic is lower than the prescribed in the Minimum Wages Act, what could be the consequences for the organization?
Again, we haven't dealt in as we didn't delve into this into our during our session between on the Minimum Wages Act, but I believe there will be some penal and interest consequences as well on the act on the employer.
Sure. Thanks for that, Shilpi. Also, Rumika, you can check out a website. There are many resources that you can go through and understand this as well. Next, there is a feedback from Swati Verma. Very informative session. Thank you. Thanks, Shilpi, once again. Thanks, Swati, also for being part of the session. Next question is from Rakshita. Is basic pay fixed or can be varied if an employee has LOPs?
The way the LOP is treated is that the entire salary is proportionated on the basis of the number of days of LOP that is there. So the basic pay will also vary according to the LOP that is there.
Thank you for that. Next, there is a comment feedback from Ashu Agarwal for this session being excellent. Again, thanks, Shilpi. Thank you, Ashu. Moving on, there is one question on this is from T. Swami K. What is the threshold limit for PF contribution?
So PF is mandatory for all employees who have a salary of up to 15,000, which we already talked about. But in case you have a salary higher than 15,000, but you are an active UN member, then also PF is applicable. In which case you can choose to contribute only up to 12% of 15,000, that is INR 1,800 per month.
Okay, thank you for that. Next question is DA mandatory to be given by any employer?
Not really. I think DNS allowance, especially in the private sector, is not a very common practice.
Okay. Moving on to the next question, which is I think there are some repetitive questions that we've already taken up, but we'll see how many we can, considering that we have passed 5 o'clock. If Shilpi, you can tell me, if we can take another, say, till 10, 5:10, can we extend the session and take the rest of the questions
Sure,
as much
sure.
as we can? Okay. So the next question is from Vishnu Murthy. Karnataka government issued a notification about gratuity payment should be through LIC or insurance. Please elaborate.
Yes, I
On
think we
this.
already spoke about this earlier that the government has mandated employers to have an insurance coverage for gratuity. And as we spoke, one second.
Sure.
It primarily involves, reaching out to insurance brokers and obtaining an understanding of how, and it generally typically involves, doing regular contributions to the insurance company so that, they are able to build up a fund to, fund the gratuity payments as and when they become due.
Okay. Next is a feedback, very informative session, and they would like to know what is the minimum basic salary in pay structure.
I don't think there is any specific regulation, but the common practice is to keep it somewhere around 40 to 50% of your, fixed salary.
Okay. Thank you for that. I think most of the rest of the questions we have taken. We'll see. Okay, so I see one more question, which is from Oma Shankar. Do we have any minimum deduction of PF if the basics exceeds rupees 50,000 and who already has a UAN?
Yeah, the 12% of 15,000 rupees, INR 1,800 per month is the minimum deduction.
Yes, okay. Then there is one feedback, nice and quick presentation. Okay, moving on to next question. I think most of this we have covered now. Mm, there are feedbacks of the session being useful, helpful. Thank you, Anjay. Could you? Okay, let me just quickly check. Yeah, you can also browse through in case you would like to take a specific question. Okay, so there is one interesting question from Ashu Agarwal. Some of the employer gives the benefit. I think some questions are still being added, so it just went off my screen. Okay, so some of the employer gives the benefit of their employee that they can save their tax if they show some bill like dress allowance and petrol and bill. So is it a good practice? Now, of course, ethically we know it's not, but then coming from an expert like you, what would be your answer to this?
I would, of course, I mean, it's something we hear every day. So, just one second. Yeah, it's something we hear every day. And so, I mean, again, it depends on, the kind of organization you are. I mean, if you talk about, tech companies today who are having, a very, very casual work culture, I will say, and, very open work culture, to have a something like a, dress allowance or uniform allowance really does not, sort of vibe with the sense of the company. So I think it's important to be mindful of, the overall perspective. And while yes, it is helpful to structure the salary in a manner that the taxes of the employees can be optimized, but at the same time, safeguarding the interest that you're not going beyond something that is palatable from a tax point of view is also something very important.
Okay, thank you for that. There are some comments. I'm just looking. There are a lot of questions related to gratuity, but I think we did answer on that. But if you could just maybe, like share once again what is the minimum time duration that you have to spend, to be eligible for gratuity.
So gratuity, I think this is something that we also, for the first time when we dealt with it, it was something that we also had to really go into. So the law typically says, and this is how we've all read through it, that any employee serving a period of 5 years is eligible for gratuity. But how there is a proviso which says that every year, in excess of 6 months will be completed as a full year, which is why once the employee completes 4.5 years of service, it is effectively counted as 5 years, and then they become applicable. And even when you're doing the calculation, you're required to do it as per the 5 years. So every completed year of service is 5 years and not 4.5 years.
Thank you for that. And thanks, Samruddhi. Thank you, Anand Kumar Tiwari, for sharing feedback, being the session being fantastic. Thank you for the wonderful session. Thank you for being a part of it. And I see a lot of questions related to these questions that we just discussed, right? And if it could be shared in a PDF format, so I can tell this for everybody. This is being recorded. So when we upload the recording, also, it will have all these questions there, and you can, get insights from here. We will also be churning out a very informative blog out of it, which will be published on the website. So in terms of written material also, you will have access to that, and it would help you there. So I think yes, there are a couple of questions that we will take lastly from Prachi. How to provide? Please confirm medical insurance. Is it compulsory to provide?
Medical insurance, there is no labor law which mandates it. It's a completely a matter of company policy.
Okay. Uh, okay, then there's one feedback from S. Anand. Thank you very much for the wonderful, useful session. Okay, one last question. This is from Kishore Chand Mishra. Dear ma'am, female employee is benefited for approximate 80 days in case of maternity. But is there, okay, but is there any rules and regulations which is benefiting the male employee for their spouse in last critical days like 15, 30, anything in the last stages?
Unfortunately, there is no concept of paternity leave in India so far. We hope there will be in the future, but as of now, it is only a maternity benefit.
Okay. Just again, I'm being greedy here, but this is the last question that we'll take. What is trade license? Is it regular or one-time compliance?
So trade license, I think you mean to say the shops and commercial establishment registration. And I mean, again, it may vary state to state. Like I think in the state of Karnataka, it is every 5 year it needs to be renewed. So again, you will have to go through the state specific regulation and then accordingly determine.
Sure. Okay. Thank you so much once again, Shilpi, for this wonderful session today. Like I can't say enough. The audience has already been sharing great, feedback with us. So thank you so much for taking out the time and being very comprehensive, being very patient with all the questions that we took. And of course, thanks to each and every one of you, our participants, for being there and asking all these questions, making the session more engaging. It always helps. Thank you so much.
Thank you, Rakhi, for the opportunity. And thank you everyone for joining. It was a pleasure.
Thank you so much, Shilpi. Also, as promised in the beginning, we have a Great Tribe community as well. It's a knowledge sharing platform. You could see the URL there. In case, if you have any more questions or you want to connect with leaders like Shilpi, you can sign up to this community. It's a free community where you will have access to resources. You can, ask questions and our experts will be able to guide you. Can we move on to the next slide? Also, there is a QR code which is present on your screen. You can scan it. It's for our WhatsApp. We are also available on WhatsApp now. So, any questions you might have related to the product, related to the webinars that we have been doing, anything related to HR, compliance, labor laws, you can scan this and you can connect with us on WhatsApp, and our dedicated team members will connect with you. Okay, so thank you once again. But before we let you go, I'm just going to launch one feedback poll. Of course, you did share a lot of good feedback with us, but if you could just quickly, tell us if you found the session informative and how would you rate the session. It will help us in, planning the next sessions and keeping in mind the topics that are most useful and helpful to you. Thank you once again, and thank you so much, Shilpi, for being a part of the session today.
Thank you, Rakhi.
Thank you. And for the audience, as I said, you can connect with us on the email ID which is there on your screen, rakhigotham@greytip.com. Any questions you have, you can connect with us there and we will be sure to get back to you. And as promised in the beginning, this session will be uploaded on our official Great HR YouTube channel. So just go there and watch it later. Thank you once again for being wonderful today, for being very, participative. I think it's important when you participate, we get to learn a lot, and vice versa. Thank you so much once again for taking out the time and being with us. Thank you so much.